What's going on, guys? Welcome back to another case study. Today we'll be covering a short I took in a New York session on the euro dollar. And today is April 4th. It is a Thursday. Yesterday we had a big bullish move to the upside, so I'm not expecting too much from the market today. More of like an intraday kind of play I'm looking out for. But right away, what do I see? If you look to the left-hand side here, okay, as we're moving bullish into these levels of liquidity, I have this high I have my eyes on. Okay, why is this high valid to me? Why is it important? Well, from here, we move lower, price would return back to this high, provided a reaction and moved away. This tells me now we have liquidity up here. Okay, so me grabbing this high here tells me if price runs it, I want to see a move in the opposite direction. Okay, so that's why I'm grabbing this high from the left. Perfect. So New York opened right here, and right at New York open, look how price sold off, took the low here to induce sellers into the market. Okay, these areas are going to be traps. We do not want to be trading from these. One, and up here, we want to wait for these highs to get taken. Okay, because that means then sellers are trapped. Okay, and then we want to see price trade above this high we have marked from the left hand side. So as we come and approach this high and actually run it, now we want to see a bearish move in the opposite direction. Okay, we have relative equals. On the other side of the market, we have this liquidity we've left as well. So the confluence is telling me that we can see price run the high like we did, like we're doing right now, and then see an entry build for us up here, okay, and then a move in the opposite direction. All right, but just because we took the high doesn't mean we're taking any sell entries right now. We need current price action to build us that entry. Okay, so no need to rush anything. So we print a high, come down lower, print this low, and we take the high again. Okay, nothing interesting as of now. Okay, and then we actually end up coming down lower, respecting this low, coming up, taking out the previous high, and just moving higher. So what is this now telling me? We're starting to build liquidity here. Okay. Again, look how we come back down to the low and then move away again. So we are now starting to build liquidity to the downside. Buyers are getting induced into the market up here. Okay, so which is telling us we're going to short through that. All right, so let's keep following on with price. Now we are running these internal liquidity points, one being here and then one being here. Perfect. So we've now taken out that last high here and we're getting a nice reaction. As of right now, any entries would be quite aggressive. Okay, going to the 5 minute and we can see what's going on here. I ended up taking my entry in the 5, so I'll stay on the 5 for now. Mark this out. Okay, this is, so I'm using the red box. It's just telling you guys essentially it's a trap. Run the 1 minute back really quick. But again, from this high to this low, we print another new high, taking out the previous. So buyers are interested in buying this thing in this area. That's why I'm using this red box here. So every time we run into it, we move away. And look how we're moving into it again. It's essentially building liquidity. Okay, so perfect. Go back on the 5. Cool, so now what do we have up here? Well, since we've ran this internal liquidity point, this high up here, and had a sharp reaction, now we've left a liquidity block. Okay, what do we have before the liquidity block? An inducement high. Why am I grabbing this high? Well, if you think about it, this high here printed at 10:15 a.m. is the last high before the liquidity block. So what's possible that can happen is from here, we get a false reaction to just build more liquidity here. Come up, take the inducement high, okay, mitigate this liquidity block area, and then short. Excuse me, and then short through that. I'm choking on my lunch right now. 1 second. Sorry about that. Apologies. Okay, so again, if we get false reactions at this area, come up, take the inducement high, mitigate the liquidity block, and again, that should provide us that sell move to the downside. Okay, and again, why is the liquidity block valid? Well, since we've ran this internal liquidity point, we have to assume we don't have any liquidity up here, so it should get respected and move away. Okay, so let's see what the next couple candles look like. We run the inducement high, perfect. Now this would have been one entry here. So as soon as the inducement high is taken, stop loss above the liquidity block, and we target the relative equal lows. That would have been one entry. Unfortunately, I wasn't able to take that one. But look what happens after. We get that close below. All right, let me get rid of this so we can see. So 1030 runs the high. 1035, we get a closure below the previous candle's low, meaning this low here. Look how we get a closure below. So essentially, it's like a bearish engulfing, you could say. Now we have a valid liquidity block entry here. So what we want to see is the next candle will open up. This is 1035, so 1040 will open up, retest it, and that should provide us that move to the downside. Okay, again, our stop goes above the liquidity block, assuming that there's no liquidity here, so we don't need to go up here. If we do, essentially our setup is just invalid. Okay, so let's see what happens. Next candle comes, tags us in. Perfect. Next candle comes. Now we're starting to get a little reaction. Now we're getting a little follow through. Perfect. Now we've just taken these lows here. Cool. Still struggling a little bit. And why are we struggling? Well, this is a trap and it's holding up for buyers. Okay, just building even more liquidity for us to target. And boom, now we're running through that. Perfect. So our target down here. And boom. There it is. Target met. Again, this was my entry here. There was a valid entry up here because this was a liquidity block with our stop above. So both of these were completely valid and clean intraday trades, and just like that, 1 and 2. But again, the second one here is the one I took. Ended up being about a 1 to 5.5 ish, give or take. But yeah, that wraps up this study. I think I've covered everything I want to in regards to this. Let's see where price is now. It actually ended up moving a lot more to the downside. Yeah, there we are. So I took profits. I'm 90% of my position now, but it ended up moving 15 more pips. So that's why I like to leave a runner. I'm still in this position now. But yeah, hope you guys enjoyed this case study, and I will see you